Welcome to Stock Market Basics for Beginners. If you've ever felt overwhelmed by the world of finance, this tutorial is for you. We'll break down the fundamental concepts of the stock market so you can start your investment journey with confidence. So what exactly is the stock market? Simply put, it's a collection of exchanges and markets where buying, selling, and issuing of shares of publicly held companies takes place. Companies issue stock primarily to raise capital. Selling shares to the public allows them to fund operations, expand, or pay off debt. To understand how the market works, we need to cover some key terminology. A stock, or a share, represents a tiny fraction of ownership in a company. When you buy a stock, you become a shareholder, and the value of that share changes based on the company's performance and market demand. The primary market is where companies first issue new stock, often through an IPO. The secondary market is where investors trade these existing shares among themselves, which is where most daily trading happens. Stock trading occurs on exchanges like the NASDAQ and the New York Stock Exchange, or NYSE. These exchanges provide the infrastructure for buyers and sellers to meet and trade. Now let's look at the mechanics of how stocks are actually bought and sold. The price of a stock is primarily driven by supply and demand. If more people want to buy a stock than sell it, the price typically goes up. Conversely, if demand is low, the price drops. Individual investors rely on brokers and trading platforms to execute trades. These platforms connect you to the exchanges and handle the transaction process. A stock ticker displays real-time information. You'll see the company's ticker symbol, the current price, and the change in price, which indicates the market sentiment for that stock. It's important to understand the difference between investing and trading. Investing is typically focused on long-term growth by holding assets for years or decades. Trading involves buying and selling stocks frequently to profit from short-term price movements. All investment carries some level of risk. Higher potential returns usually come with higher risk. Understanding your risk tolerance is crucial before putting money into the market. Here are a few tips for beginners to start investing safely. Always do your research and due diligence. Understand the companies you are investing in, their financial health, and the industry they operate in. You've taken the first step toward financial literacy. Keep learning, start small, and consider opening a brokerage account to begin your journey. Good luck!